Hi there, I'm Chris Campbell, Head of Tax for Tax Practice and Owner-Managed Business Taxes here at ICAS, and I would like to make you aware of some recent developments on the High Income Child Benefit Charge, or HICBIC for short. In his spring budget, Chancellor announced that the HICBIC threshold would increase to £60,000 from 6 April 2024 for the higher earning taxpayer in a household claiming child benefit. As well as the increased threshold, the Chancellor also changed the HICBIC withdrawal rate, so that it now applies between £60,000 and £80,000. From April 2024, HICBIC will be charged at 1% for every £200 of adjusted net income above £60,000, as opposed to the previous 1% for every £100 of adjusted net income above £50,000. Whilst the future shape of HICBIC and whether it will be applied on a household income basis will not be known until a future fiscal event, the increase in threshold will, however, give you the opportunity to discuss the merits of making a child benefit claim with those clients who have elected not to receive payments based on the previous thresholds. Ahead of the change in HICBIC threshold, we've also seen a range of HICBIC tax cases where taxpayers have not realised that they had fallen into the scope of HICBIC. Following legislative changes after the Wilkes case, HMRC has been seeking to use discovery provisions, and this has resulted in some fairly significant liabilities along with interest and penalties being charged. This was particularly so in the Erridge case, where pressure on a taxpayer with adjusted net income above the then £50,000 HICBIC threshold resulted in the family home being sold to pay the unexpected tax bill of £15,374 and penalties of £4,151. In this case, Mr. Erridge is dyslexic and has poor reading skills and spelling skills, and this had an impact on his ability to review HMRC guidance. As he was unaware of the HICBIC rules and had not received an awareness letter in August 2013, no HICBIC liability was being recorded on his tax returns. He did, however, appoint a tax advisor to assist him when he became self-employed in 2020. Even though Mr. Erridge appealed the assessment and the penalties, HMRC nevertheless adopted a heavy-handed approach and insisted that Mr. Erridge pay the full amount due and even threatened the use of debt collection proceedings. In a state of panic, he realised that the only asset that he could sell to raise the amount due was the family home. And in pursuit of a prompt sale, Mr. and Mrs. Erridge accepted an offer below market value, and the amount demanded was paid pending the case going to tribunal. In the end, the tribunal found that Mr. Erridge had a reasonable excuse, and this meant that all but one of the years in question was found to be out of time. For the remaining year, it's possible that Mr. Erridge's tax agent may wish to explore the application of extra statutory concession ESC A19. ESC A19 explores whether HMRC makes use of information it had available to it, in this case, Mr. Erridge's exposure to HICBIC. It's important to bear in mind that ESC A19 could have value when dealing with HMRC on behalf of your clients. This particular case was unfortunate in that Mr. Erridge was subject to unnecessary pressure from HMRC, which resulted in feeling no option but to sell the family home. This was in order to pay a HICBIC liability, the majority of which was cancelled by the tribunal, and the balance potentially subject to an ESC A19 claim. A complaint to HMRC would seem a logical way forward for him. More generally, the recent HICBIC cases stress the importance of clients making their tax agent aware of whether they're a household claiming child benefit. Our members in practice can help their clients avoid an unexpected HICBIC liability by routinely checking on any changes in circumstances when checking their records are up to date. We've prepared some resources on HICBIC on ICAS.com that you may find useful, and as ever, we'd be very interested to hear of your experiences on dealing with HMRC in this increasingly complicated area of tax. You can get in touch with us by emailing tax@icas.com with your insight and feedback. We'll be very pleased to hear from you.